In today's Targets in Focus, we'll be taking a look at Aussie dollar, the Chinese yuan against the dollar and pound dollar. Joining me on the line to discuss these currency pairs is Michael Sneyd, FX strategist at BNP Paribas. Hello, Michael. How do you think the market will react to the key US Fed rate decision today? And based on this, what are your short and long-term projections for the Aussie dollar?
So the economists at BNP Paribas are looking for today's Fed decision for the Fed to be ending Operation Twist. They're carrying on with their existing MBS purchases that they started in September, but replacing Operation Twist with outright Treasury purchases. And all in all, we're looking for kind of total monthly balance sheet expansion from the Fed to be in the region of about 85 billion a month. Now, in terms of the kind of total stock of QE that we're expecting, I think given the conditionality that the Fed has put in place, they're likely to be continuing with balance sheet expansion through towards the end of 2013. So I think the total amount of balance sheet expansion from the Fed in QE3 is likely to be in the region of about $1.2 to $1.7 trillion. Now, this is larger than both QE1 and QE2, and is definitely a significant amount of balance sheet expansion. And we think that based on the QE1, QE2, this is going to have an impact of substantially weakening the dollar, and also boosting risk appetite and boosting hard currencies amongst G10, so the likes of commodity currencies. And we think that the Australian dollar is going to be one of the main beneficiaries of this move. However, we think that the impact that the Fed's decision is going to have is unlikely to be a knee-jerk reaction. So we don't think that this week we'll see a knee-jerk jump in Aussie. Rather, much like in QE1 and QE2, we're looking for gradual dollar weakness over the next 12 months and gradual Aussie dollar strength. So we're looking for, over a 1 month horizon, Aussie dollar to rise to 108, and then going into towards the end of next year, we're looking for Aussie dollar to reach kind of its previous highs of around 110.
What are your short, mid and long-term forecasts for the Chinese yuan against the dollar?
So the Chinese yuan, it's been starting to trade much more in line with kind of risk currencies, and this is something which our Chinese strategists think is going to continue. Also, with the Chinese economy kind of turning a corner, becoming more robust, and growth rebounding into 2013, we're looking for a reduced amount of CNY intervention by officials in China. So we're looking for dollar CNY to continue its grind lower. Over 1 month, looking for around about 620. In 3 months, looking for dollar CNY to be trading about 615. And then by the end of next year, we're looking for dollar CNY to be trading very close to 6. Now, as well as kind of more appreciation of the CNY, we're also looking for a bit more two-way volatility in the cross that we've seen in the past going into 2013.
UK jobless data has been released today, showing the unemployment rate unchanged at 7.8%, and jobless claims are down to minus 3k from 7k. What are your projections for the pound dollar?
But the UK is an interesting story. The data has been slightly mixed recently. So we had the slight positive surprise today, but we've had kind of a negative surprise to last week's IP data. I think really with sterling, what's key to remember is that this data is coming out against a backdrop where investors still seem to be very neutral on the pound, and also, to some extent, also slightly bearish on the pound. And the consensus is very similar. Consensus expectations are quite neutral on sterling. We do have, on a relative basis, the UK economy, we think is set to outperform next year, particularly relative to the Eurozone. And we think this is going to provide support to the pound in 2013. Also, for the cable cross, it's going to be substantially impacted by the broad dollar weakness that's going to be brought on by the Fed's very aggressive policy. So all in all, we're looking for quite a substantial move in cable next year. We're looking over a 3-month horizon, the cross to break into the 170 handle. And then over towards the end of next year, we're looking for cable to trade up to about 178.
And which currency pairing do you think is most at risk now and why?
So when we look at our positioning analysis of how FX investors are positioned, the most extreme position out there amongst the investor community is short yen. We've seen a lot of investors buy into this long dollar yen trend that we've had, and that also putting on long dollar yen positions after Abe's comments and ahead of the election in Japan this weekend. This means, with investors having already built substantial short yen positions, there's a lot of vulnerability for these positions to be squeezed out. We think, particularly given that our view is that post the election this weekend, where the LDP party seem likely to win, it seems unlikely that the policies that are going to be put in place are going to be as aggressive as Mr. Abe, the party leader, his comments have been leading up to the election. So we think we could see some disappointment amongst FX investors, see some profit taking on long dollar yen trades, and also positioning suggests that we could get a squeeze as investors hit stop losses on trades. And so we think that we could see dollar yen get squeezed out and move lower over the next month or so.
Thanks for joining me, Michael. Stay tuned to Dukascopy TV for more exclusive updates and interviews. For now, though, goodbye.